attending part 2 of our series on the LTC crisis, LTC alternatives in addition to traditional long-term care. Please welcome Brent DeGroot, One America Regional Account Director, Wendy Swanson, Senior Annuity Consultant and Investment Advisor Representative, IAR at Senior Market Sales, and I am Jackie Slaughter, Associate Director of Long-Term Care Relationships. We want to go over some of the items from our first webinar, and we want to teach and educate on the ability to use qualified funds and non-qualified funds for long-term care. Also, medical advancements resulting in longer lifespans have led to fewer coverage declines, which is mainly the underwriting. How new hybrid policies that link long-term care with annuities and life and have soared in popularity, believe it or not. Then how to pay for options other than single premium. They have 5-pay, 10-pay, 20-pays, and lifetime pay. We're not, confined to the single pay. So we're going to start with Wendy and Brent, who, by the way, Brent's company, One America, came out with enhancements to their AssetCare product. And Brent, can you explain the PPA and its effect on non-qualified and qualified funding?
Thank you, Jackie. The Pension Protection Act, PPA, as many of us refer to it, the PPA did a number of things. Largely, it was really helped to enhance the pension system. But when it comes to long-term care planning aspects, what it really did for us was the ability to allow for certain annuities to be 1035 exchanged to a PPA eligible annuity. All of our annuity suite here at One America is a PPA eligible annuity. Many of those consumers have had these annuities for many years with lots of embedded gain. That gain is taxable once they take distributions. So by just simply 1035 exchanging, they could make all of that gain income tax free as long as they're using it for long-term care. So that is a big help in designing and protecting customers out there using the PPA.
And Wendy, you're a senior annuity consultant. Can you give us a high-level overview of annuity on the long-term care planning side that you have regarding qualified, non-qualified funding?
Absolutely. Appreciate being here and the question. And you and I, we've talked a lot.
Yes, we do.
About long-term care. I know you've got your stories with your mom, and I've had mine as well. The first thing I want to say is the products that Brent would have and other solutions, that is going to be the preferable way for clients to gain the maximum amount of leverage and tax benefits and things of that nature. But realizing that sometimes they're just not going to get through underwriting, realizing that sometimes no matter how much they probably should go through underwriting, maybe they're going to just say no. We do have options for those individuals, right? So we can work with both qualified and non-qualified dollars. Now, we're not going to get the tax benefits that we're getting with Brent over here, and that's one of the trade-offs, but there's generally no underwriting that's going to be required in order to get the leverage that we're looking for. The biggest thing with the different riders is really work with somebody who understands the difference with each riders. And the reason I say that is some of those are going to be based off of chronic illness that's going to be described as hospital, hospice, or a true long-term care facility. Others are going to describe an event as an individual losing 2 out of 6 ADLs within a certain time frame. And so, depending on the importance of having one weigh heavier on the other, right, that should also weigh into your determination of solutions you might want to offer to your clients. But at the end of the day, if they'll go through underwriting, whether it's traditional long-term care or hybrid long-term care, absolutely that's the pathway to go forward to get the maximum amount of leverage to your client for one of those incidents and, of course, the tax benefits we're talking about.
Well, Wendy, I'm glad you mentioned the underwriting portion of it, but there has been some expansions in underwriting, lots of expansions in underwriting, just like we have evolved in the long-term care space of different products that are out there. So just before Brent tells us about the enhancements to AssetCare, I want to talk about just a few things of examples from One America from an underwriting perspective. I had a client that had diabetes since birth, so that's a stage. I mean, that's a 1, right? So I wasn't sure any carrier would look at a stage, level 1, type 1 diabetes. So diabetic. So I emailed to One America, which gives you instantaneous response, and they said yes. I was totally floored. It was a pleasant surprise. So we were able to help that client. And also on cancer. Cancer is one of those things that in the past, and when you were correct when we were discussing it, you had to wait 10 years. And it was this long, lengthy time that you had to be healthy after treatment. And One America does have cancer, and we'll look at it after 6 months after treatment. 6 months isn't as long as 10 years or 2 years or any other time frame that's out there. But Brent, I'd like to get back to One America and their enhanced product.
Well, thank you, Jackie. I appreciate that. And Wendy, great job really covering the whole breadth of solutions that are available here at Senior Market Sales. So you're in good hands when you bring your client situation to Senior Market Sales to really help you, protect that client, if you will. So with that, thank you. On the underwriting front, that was very kind that you pointed those things out as well. Now, we may rate those cases, but that's a good way to really save that sale, if you will. So let's get into some of the enhancements. We're calling it Asset Care 2024. That was really just our life chassis that we've made these enhancements to, so not the annuity suite, but our life chassis. And really we did 4 main tenets when we are looking to enhance this. First and foremost, simplicity. And I will be the first to admit that One America over the years has made things probably a little bit more difficult than they needed to be. And so finally we are really trying to simplify the whole process in putting a plan together. And when I'm talking about simplicity, it was largely in the design. So in the overall concept doesn't change. It's a base policy that the client is going to use first. So it, essentially self-insuring, but we add that rider to protect against those catastrophic expenses. So base plus rider. But where we really simplified it is now all the base policies is just a 2-year base. Then we simplified the riders as well as far as choices are concerned. You can have 2 plus 2, 2 plus 4, 2 plus 6, or one of the things that has always set us apart here in the asset-based planning space is that we've got our lifetime rider as well. So 2, 4, 6, 8 or lifetime are options. Very simple design, really like, and getting a lot of great feedback around how simple it is now versus some of the aspects in the past. So another area that we really kind of focused on was flexibility. And that's really flexibility at claim time. And it's really how we're adding certain aspects and really trying to help those clients at the time of claim to really bring in the easiest way or, through that process to just be there at every step of the way. First and foremost, one of the things we brought in was independent providers. And what happened with independent providers, especially in these rural areas, was you'd have a home health care aide or somebody that would provide that care, but they had to be licensed, still have to be, but they had to be a part of an agency. So likely in the rural scenarios, you may have an hour and a half, 2 hours before your next major city where somebody is actually needing care, and that may really put it at a disadvantage because they'll call that provider and they won't be a part of an agency, but the agency says we can't make those dollars and cents work. 2 hours each way to provide that care. So independent providers still must have the licensure of the state, but can be independent. And those we will do any kind of reimbursement scenario on that as well. So really adds a way to get that home care protection, if you will, outside of being licensed with an agency. Another piece that we really tried to enhance the process, the claims experience, is adding a cash benefit. Look, we are a reimbursement company through and through. That will not change. But we also understand that certainly when the claim time first arises, that families need a way to transition or work through putting that permanent solution in place. And cash may be just the thing that they need, whether it's the closest daughter that's providing care, that's, going to do it on top of her job, whether it's a friend or a neighbor, whatever the case may be, to come over and provide those services. We've got the cash availability for them at 75% of their monthly amount. So it's not that we're going to use up all of that or not get the extra 25%. That would just elongate that base policy over those that 24-month period. So if they used 100% of the cash, it would really be a 32-month period for that base policy. So really what as a matter of fact, one of my colleagues, I really like how he uses this, and he said it's kind of the figure it out money. So it gives the families time to kind of figure out what permanent solution they want to put in place. And why we do that only on that base policy, largely most families don't want, again, whether it's that daughter that's close by, whether it's the friend or they don't want that person to be doing care for 8 years. I mean, the burnout there is incredible. So we're really trying to just provide a little way to provide some extra cash and get them through to find that permanent solution. That was a great enhancement there as well. Another piece that we added is a caregiver consultant. And that's really a coach, if you will. So when that care need first arises, it may be an unlicensed person. They may be using the cash benefit, but they want to understand, how do I best care for my loved one, or how do I best provide that, or what are ways that'll provide me some peace of mind, and I don't get stressed out, things of that nature. So that coach really is there to coach them through that policy. It's paid for by our policies. We're the first in the industry to really bring this type of help to the claims process. So we're really liking that as well. The last one that I'll add is just we're adding more supportive equipment, like a human lift, the medical alert system, medication dispensers. So really all of that just to ease that claims process is a large part of those enhancements. I can go on. One of the biggest thank you for giving me this opportunity here. But one of the biggest things that, of course, I think most people will really like is the fact that we've enhanced our pricing. And we're very, very competitive now in our overall pricing. The actuary sharpened the pencils. And one of the areas that we were really lacking was in the form of adding inflation to our policies. And we really repriced around those inflation options. So you're going to find overall that we're very competitive with most of our competitors out there, our competition, in that pricing aspect with inflation, or again, still without. And then you look at the design that really puts us out there. Look, most of, senior market sales included, most of the brokerage general agencies out there have to take kind of a market basket approach, if you will. Can't show favoritism to one, carrier over another. So we understand that, but when we're trying to compare apples to apples, now you're going to find with the plan designs that we've changed, the simplicity around that, and the pricing, especially on those inflationary protections, we're going to be very competitive in this marketplace. And then I really talked about the enhanced claims experience already, so I thank you for giving me the floor there for just a few minutes.
No, we appreciate it because I think people need to understand how LTC is evolving and more looking at the client versus the benefits of having an LTC plan. Because I can tell you just some of the things that you mentioned in regards to care for that client, or even I can say for my mother, right? Even though she had a long-term care plan, and most people who are on claim today are with traditional plans. Traditional plans can be very restrictive. They have changed, but those plans that were sold when she went on claim and people are on claim today, the majority of them are restrictive. So it becomes a job being able to, like you said, have somebody to talk to help you deal with your parent, right? Even though you have a plan, you still have to deal with the emotional. emotional will always be there. You know, you have to deal with them, dealing with their feelings of being able not to do the things that they want to do, right? And you helping them to understand it, that's fine, that you can't do those things. We have help here to help you. So that relieves me, let alone the medical dispensers you're talking about for medicines. Oh, man, every week I was filling, I was doing the medicines for her, right? Filling out these little, that's a job, right? Because if you accidentally miss one or something like that, or you're actually giving more than the other, because there was one time I did it too, and my mother, she counts hers. She was she said, you accident, okay, I'm going to be very careful. You know, somehow I got 2 of one, but I was not, it was on an accident, trust me. But those things make your life a little bit easier as the family member, let alone having, you know, someone else come in and help. But Britt, I want to make sure I understood. So if I have a long-term care plan with One America and I'm in my first 2 years, my daughter, who is a nurse, so she's licensed with the state, could come and help me and I could pay her cash.
She could, yes. Okay. Yeah, so it could be a family member there if she is licensed.
Okay. Yep. But do they have to be licensed as a family member?
To be licensed
so she's just lucky I have double. I have double coverage, right? She's licensed. But if it was my other daughter, who's not a licensed, you know, caretaker or caregiver, she could do it also.
Yeah, so that informal caregiving is where that cash really comes into play. Mm-hmm. So
totally informal. Yeah. And then if I'm correct on your claims also, the piece that probably took a lot of my time with my mother's claim was every 2 weeks I had to send in the invoice. And don't forget to send in the invoice because then it doesn't go back into her account. So you want to make sure you balance things. Am I correct that you guys do that for?
So, right. So, right. I think there's a lot of misnomers around reimbursement. Okay. And, you know, people are thinking, well, reimbursement on a whole, you think, well, I got to save all those receipts and then submit them to the insurance company and then wait for that reimbursement. So we have through the coordination process of that, we can work directly with those providers, whether it's that independent provider or, you know, part of an agency, and they can bill us directly, we'll pay them directly, and then what gets sent out to the family is really an explanation of benefits, if you will, an EOB, pardon the acronym.
Yeah, but, you know, that's good to have.
Yes.
I mean, what I got was just basically, how can I put this? It was just basically showing how the total amount went down by whatever claims were paid out, and that was about it. It didn't give any specifics other than that, you know. So I think that's fantastic because having to stay on schedule every 2 weeks to submit that, because every caregiver or services does it differently. Some do it monthly, some do it every week, some do it every 2 weeks. So it can get quite confusing or bearing on the person who has to make sure those receipts or invoices get turned into the carrier. And if you're willing to do that, oh my goodness, what a relief. I'm kind of sad that, you know, that product wasn't out there back then, that you do a lot of work with these older plans, but with the newer plans, of course, the evolution of the plans make it much easier on that family member or family members in helping with their family member or friends, whatever. But I thank you both for your information on planning, especially about the non-qualified and qualified funding that a lot of folks don't understand that you can utilize for long-term care. We want to make sure that our advisors can preserve their AUMs, keeping your clients, survivors as clients, as one, and to grow their business. And we hope that this webinar helps them understand that there are multiple and a plethora of long-term care options out there for their clients. It's not just limited to traditional. Traditional does have its space, but you have options. And we're always looking for, and I know Wendy and I do this, and when Brent does his presentation, it's always about the leverage. It is about the client. It's not about the carrier. It's about the client and what their leverage is. And right now you have a lot of leverage out there in comparison to plans because people do want to see more than just one. But the leverage is getting awfully a close game. That's the thing about hybrids. I mean, there are changes all the time, but they're better changes for people. I mean, they're not negative. They're better changes, and we appreciate that because that keeps a new conversation for us in regards to long-term care.
Competition is good. It keeps them all honest, right?
There you go.
You know, I'll say, Jackie, what's so great, and I kind of mentioned this earlier on, was the fact that you have so many solutions, right? And the things that Wendy was talking about with really no underwriting, right? Then you've got some areas on our annuity chassis that would be a little bit of underwriting. And then all the way to more full underwriting with maybe the life chassis or a traditional plan. So really all aspects you have covered. So.
Right. And we have, as you said, different solutions. That means different carriers, too. Brenda's been very helpful in our webinars in regards to the LTC crisis. So he got the spotlight. But also remember, this month is LTC Awareness Month, November. So when you get over the holidays with your families and friends, bring up the subject of long-term care. You don't have to pounce on grandma who's sitting over there saying they're talking about me, right? So come from a different direction. Come from a direction. Well, a friend of mine told me about their family having to deal with long-term care for X person, right? And tell a story. If you don't have a story, we got plenty of them we can give you, and you can utilize us as your example. But I think when you point out grandma or grandpa or Aunt, Lily, it's not fair to them to make them feel like the spotlight. Everybody's noticing I'm getting older. But no, talk about something else just to bring the subject to light. Give an example of a friend, or like I said, we can give you plenty of them. But thanks for your time to both of you as our guests and sharing your knowledge. And thanks for you taking your time out of your day for listening to us and hopefully being educated on some of the solutions for long-term care, since there are a plethora amount out there, whether they're life or annuity-based. And we will have a follow-up webinar in the first quarter of 2025. And again, thanks and have a fantastic day. Thank you.